What's going on, everybody? Welcome back to another brand new video. So for this week, I originally had a different type of video planned out for you guys, but something occurred in the markets starting on Monday earlier this week, and it just caught my eye, and I figured this was probably the type of video I wanted to make, and it's probably the reason why you guys clicked on it. So what happened on Monday was pretty much all oil and energy and utility stocks took a massive dump. I don't know why. I've been trying to do tons of research, but the day before, on Sunday, which was July 5th, some news came out about Warren Buffett. So Warren Buffett has decided to purchase almost $10 billion of Dominion Energy asset gas lines. That is a crazy amount of money, and it's actually the first move Warren Buffett has done throughout this whole type of recession we're in. But I'm not sure why. This was the only piece of news I can find, which came out again July 5th. And for some reason, the next day on Monday, energy and utility stocks just took a massive dump, like all of them. And let me show you guys. So I own 3 energy/utility stocks. One of them is an ETF. Here on Monday, we can see it had fell about, about 11% in one day. This was a crazy drop right here. I actually did buy a little bit more on the dip, but this is only the first of my stocks that fell. And we can look at Dominion Energy, which was Warren Buffett's new purchase. It opened up Monday at $80 and it closed off at about 72 bucks. Like, that is insane fall off, major sell off right after a purchase. All right, so what gives? We saw massive sell off in energy and utility stocks Monday. But as you can see, in my energy and utility sector, only make up 9.7% of my overall portfolio. My largest holding being in almost 25% of tech and telecom. So this is what inspired the topic for today's video, which is diversification in your portfolio. For you experienced investors out there, you guys may already be aware of the importance of diversification. But for the new investors who are just getting started and really want to craft a well-balanced portfolio, I really hope you can learn a thing or two from today's video, because it will greatly help your chance of overall success in the long term. Again, for you experienced investors, if you want to watch the video just to watch, maybe you'll learn something new, stick around. So for those who don't know, diversification is spreading your risk across different types of investments, the goal being to increase your odds of investment success. So for simple terms, diversification is just holding investments which will react differently to the same market or economic event. A good example is always stocks and bonds. When the stock market is doing really well, stocks will tend to go up, bonds will kind of go down a little bit. When we're in a recession or tough times like we are now, bonds will moreover hold their value and go up, and stocks will be on the decline. So the ideal portfolio would be to hold both. So that way you get the best of both worlds and reduce your chance of loss. So back to the portfolio here, like I was saying, even though my energy and utility sector had fell, my portfolio only fell about $10. I don't even know what that percent is, but it only fell about $10 from $14.24 to $14.14. And if we compare to all my regular stocks, AMD actually grew Monday. Disney also did well on Monday. JP Morgan actually did also very well on Monday. And then last, we'll just look at Starbucks. Starbucks also did pretty good on Monday also. So even though my utility and energy sector totally took a dump, all my other stocks were able to hold up very well and minimize my entirety of loss. So what are the overall benefits of diversification? So like we just went over, first is you're going to be minimizing the risk of loss to your overall portfolio. So again, even though the one sector had fell, all my other stocks were able to hold up, keep afloat, and some of them even actually progressed that Monday. So if I had majority of my stake in utility and energy, I would have been seeing massive red light. But since a lot of my holdings are in tech and telecom, and a pretty good chunk in consumer goods and financials, and a large chunk in business actually, it was all able to hold afloat and minimize my risk of loss. Second is it exposes you to more opportunities for return. So a good example for this would be the tech and telecom industry. So as we know with tech, it's always changing, always progressing, and there's usually always news coming out. So maybe tomorrow some news comes out, like with Microsoft or Apple, maybe they're gonna do like a collab and it's gonna be life-changing, and the whole tech for that day is gonna be booming. If I wasn't invested in tech, I would have missed that complete bull run for the day. But since I am, it exposed me to that opportunity with diversification. Third is it safeguards you against adverse market cycles. So we're in a market cycle right now, right? So stocks go down, bonds perform pretty well. Now the opposite is true. Stocks are doing pretty well, so bonds kind of taper off a little bit. As you can see here, bonds make up 7.2% of my portfolio. So I do have that little bit of exposure. So with the bonds holding up well, it does kind of safeguard me in the fact that I don't have to worry about so much loss if the market decides to turn around. And the fourth benefit overall is it reduces volatility. Volatility can be a little scary, especially when it's trading down or you're surprisingly seeing a large bull run. A lot of that utility can come from just one sector, especially in the tech sector. So having all these other well-diversified sectors can help ease that volatility. So for me, when I'm choosing stocks and I'm trying to pick where to allocate, which sector needs the most attention, I like to think of as all my stocks as performing as a team. So take a baseball team, for example, right? You have a pitcher, you have a right field, left field, shortstop, outfielders, infielders. They all have a specific part they need to play in order to make the game and your team well-rounded. If you were just to have a whole team of first bases, that's going to be very lame because, who's protecting the left side? Who's going to be protecting all the other bases, right? So the overall take is each stock should serve a different purpose in contributing to your portfolio. So my portfolio, I believe I am already pretty well diversified. My Disney is kind of my entertainment. We have some REITs. My ADP is my business. My SPHD is kind of my mirror to the S&P 500. Starbucks is my consumer goods, which also ties into Coca-Cola. I'm just starting to pick up Microsoft to really cash in on that bull run of tech stocks recently. And then of course my energy and utilities such as UTG. So all these stocks in my portfolio play a very important role. Back to the analogy, I'm the coach, these are the players, and these are the positions. So they each serve their very important role. Like Disney, my ADP team up, and they're going to be making my business. I only have one bond stock at the moment, so they are my bonds. My Microsoft, AMD, Amdocs, AT&T, Verizon, they're all going to be grouped up to make my tech and telecom sector, which I purposely have as my biggest position. My SPHD and Div are going to be my value ETFs. My Honda and Ford make up my little automotive. So as you can see, all my stocks have their roles, and all of them have a part to play in the overall portfolio, making this whole pie very diverse. So now you guys know why it's so important to stay diversified, to really just protect you against that risk of loss and volatility. But for the portfolio here, guys, it has been a rough week. Starting, obviously Monday throughout Thursday, man, it was looking bleak. I was like, man, we're going through a loss. The markets are finally turning around. But then around 8 a.m. to now, we've seen this kind of nice little gain right here. So throughout the little sell-off this week, right around here, that's when I put in $100, and I decided to kind of chip into all my other stocks that I own to increase my share count and minimize my actual loss on return. So I chipped in a little bit on AT&T, OKE, and Coca-Cola. And then I finally decided to pull the trigger on Microsoft. There's so much good news coming out with Microsoft. I believe they could probably double within maybe 2 years. This could easily be a $400 stock. So for Microsoft, since I'm only doing $100 a week, I decided it'd be best to dollar cost average into it. So I purchased 0.4 shares right around here on Tuesday. But that's going to be the video, guys. I really hope you learned something and the importance of why diversification is important in all your portfolios in order to stay in the game long term and really minimize loss and to be exposed to those nice opportunities when they come. So I want to thank you guys for watching. Leave a comment down below, leave a like, subscribe if you're new, and we'll see you in the next video.